Bring in the co-founder and CEO of Bitwise Asset Management, Hunter Horsley. He just filed for an SEC-regulated crypto ETF that looks to change the SEC's mind by being more diversified. Hunter, welcome. Okay, so listen, you're looking to do where no man has gone before. I mean, why do you think that your model, your ETF, should get SEC approval? Sell it right now.
Yeah. So last week we made the first S1 filing for the first ever index basket ETF. We actually introduced a private index fund last year that we've been operating since then. And in our experience operating the vehicle, dealing with the questions around custody, dealing with all the trading partners, striking the NAV daily, audits, tax, hard forks, airdrops, all of those complexities, we feel that it is possible to effectively operate an index vehicle. We like the index strategy. Our clients like the index strategy because many of them have an investment view that's not specific to one coin. They think that something promising could come out of public blockchains. A cryptocurrency may emerge and be something really valuable. And an index is a way of capturing that. I think a lot of the focal point around public registered products, ETFs, has been on Bitcoin because there's a narrative that Bitcoin is the digital gold, and we saw the gold ETF come to market first in 2004, and then commodity index came in 2006.
You feel like the SEC understands the crypto industry?
Yes, yeah. So I think for many of the people in the space, I'm sure that BK feels this way. The SEC over the last 2 years has demonstrated, I think, a great understanding of the space, a strong open-mindedness, and BK can of course speak for himself, a strong open-mindedness about the space, but I think they're being cautious, and that's their job, and that's what we would hope they would do. And even just this year in the ICO markets, they've been doing enforcement, trying to clean up the space, and so I don't think that they'll be in a rush to approve an ETF. We're excited to talk to them about our experience running a vehicle. But this is what you would expect from them.
So I'm curious about your vehicle, how it might be different. I mean, I understand the index approach, but in terms of the SEC's view, you have an index, but in there you also have some privacy coins, which other countries like Japan have said, you know what, we don't want our exchanges trading this. How is that mix going to be received by the SEC? Yeah,
so that's a great question, and we look forward to chatting with them about that. I think from our perspective, the things that Dahlia mentioned in her January letter, the issues around an ETF, custody, liquidity, market manipulation, they're similar for most of the large cap assets. So once you get comfortable with what it takes to do that effectively in crypto, our feeling is that you can do that for many different coins. But again, that there's merit to an index approach. I think there's a lot of discussion around privacy coins, as you mentioned. Yeah.
So, but how do you come up with those weightings? Brian's talking about what instruments might be actually more tolerable or less tolerable to the regulators. But how do you come up with those weightings? I mean, why do you have Bitcoin Cash at 1% where other people might have it at 10?
That's a great question. So the index follows a methodology. It's a 5-year diluted market cap. So the 5-year adjustment is to deal with a crypto-specific feature, which is that unlike equities, there's a continuously changing supply. The amount of Bitcoin will be different tomorrow than it is today, but it's fundamentally a market cap weighting. And we don't cap the top asset. And I think that's something that's important for the space. The index's goal is to capture the most valuable assets that emerge. A lot of people think of it as an S&P 500 for crypto. And if that's 2 assets that end up dominating in the future.
Which to you it is, because if I read your documents correctly, about 50 to 55% is Bitcoin, Ether. So those two are about 75%.
That's right.
But is that diversified enough, do you think, to ease some of the SEC's concern? It's very, to your point, you're basically a 2 crypto ETF with a couple others thrown in.
You know, the top 5 names in the S&P 500 have as much market cap as the bottom 280 names. So I think this is a natural characteristic, and we see it in crypto as well. For many years, Bitcoin was the only asset that really had meaningful market cap. It was 85% of the market for 8 years until 2017. And then in 2017, we saw a number of other assets appreciate meaningfully. And today it's around 45% of the market by market cap. The goal of the index is to capture however this plays out for investors. So if it ends up being the case that it's Bitcoin and Ethereum, if it ends up being the case that there's a lot of different cryptocurrencies. Of course, Bitcoin and Ethereum have competitors. There are also people who are using public blockchains to serve different applications besides just digital gold or besides just smart contracts. And so however that plays out, the index captures that. And I think that's why a lot of people like that approach to the space. It's why we like that approach. Unless you have a very specific research view, if you're making a 1% allocation, you're probably not going to keep up with the daily changes and how that unfolds. And so making a super concentrated investment may not.
Making a strong case. Hunter Horsley, thank you very much. Hunter, good luck.